Ever wondered how financial security and wealth building could change your life? Well, let's dive into it. Financial security isn't just about having money in the bank, it's about freedom, peace of mind, and the ability to pursue your passions without monetary constraints. Imagine having the financial capability to buy your dream home without worrying about the mortgage. Or, envision a future where you can retire comfortably, sipping your favorite drink on a beach, without the fear of running out of money. Maybe you've always wanted to start a business, but the financial risk held you back. Financial security can turn these dreams into reality. It gives you the cushion to withstand life's unexpected blows and the leverage to seize opportunities that come your way. It's not just about surviving, it's about thriving. In the pursuit of this freedom, wealth building plays a crucial role. It's not a sprint, but a marathon. It's about understanding and implementing strategies that compound your wealth over time. Understanding wealth-building strategies can be the key to a secure financial future. A secure financial future starts with a strong foundation. Now, let's dive into the basics of wealth building. Imagine a house. Without a solid foundation, the most beautifully designed structure would crumble. The same applies to your financial health. This foundation is built on three key pillars: saving, investing, and diversifying income streams. First, let's talk about saving. It's the simplest and most intuitive element of wealth building. It's about setting aside a portion of your income regularly, before spending on anything else. This is not just about accumulating a pile of money, but about developing a discipline that will serve you in all aspects of wealth building. Next, we have investing. This is where your saved money gets to work. Investments, whether in stocks, bonds, real estate, or even in a startup business, have the potential to grow your wealth exponentially. The key is to start investing as early as possible and let the magic of compound interest do its work. Now, on to diversifying income streams. Relying on a single source of income is like putting all your eggs in one basket. It's risky. Diversifying income streams, whether it's through rental income, a side business, or investments, can provide a safety net and improve your financial resilience. Let's take a moment to understand the concept of paying yourself first. This is an age-old financial adage that emphasizes the importance of prioritizing your financial future over present desires. When you receive your paycheck, the first payment should be to your savings or investment account. This simple act of self-preservation can contribute immensely to building a robust financial foundation. So there you have it. The basics of wealth building. It's not rocket science, but requires consistency, discipline, and a little bit of financial acumen. Remember, every journey begins with a single step. The sooner you start, the more secure your financial future will be. A strong foundation is crucial to build and secure wealth. Investing can be your powerful ally in wealth building. Let's start by unmasking the three giants of the investing world: stocks, bonds, and real estate. Stocks represent ownership in a company, giving you a chance to partake in the company's success. While they may fluctuate, they have historically provided substantial returns over the long run. Bonds, on the other hand, are like loans you give to a government or a corporation. In return, they promise to pay you back with interest. Bonds are generally considered safer than stocks, but with potentially lower returns. The third giant, real estate, involves purchasing properties, either to rent out for a steady income stream or to sell for a profit later. Like stocks and bonds, real estate can provide significant returns over time. But how do these investments lead to wealth accumulation? Here's where the magic of compound interest comes in. Imagine a snowball rolling down a hill. As it rolls, it picks up more and more snow, growing larger with each revolution. That's exactly how compound interest works. Let's say you invest $1,000 at a 10% annual return. After the first year, you'll have $100 in earnings. But instead of taking that $100 out, you leave it in the investment. The next year, you're not just earning interest on your original $1,000, but also on that extra $100. Over time, this compounding effect can lead to exponential growth in your wealth. To illustrate, consider the story of Grace Groner, who bought 3 shares of a pharmaceutical company for a total of $180 in 1935. She held on to these shares and reinvested the dividends. By the time of her death in 2010, her investment had grown to a staggering $7 million. That's the power of investing and compound interest. But remember, investing is not without risks. It's crucial to thoroughly research and understand your investments and to diversify your portfolio to mitigate these risks. Investing wisely can significantly contribute to your wealth-building journey. Scene script. Diversifying your income streams can be a game changer. Imagine a stool with a single leg. It may hold up under normal circumstances, but without support, it's vulnerable to tipping over. The same principle applies to your finances. Relying on a single source of income is like standing on that one-legged stool. It's risky. Diversification, in the financial world, is not just about investing in different types of assets. It also means having various sources of income. This approach can provide a safety net, reducing the risk associated with depending on one income source. Moreover, it can accelerate the rate at which you grow your wealth. Let's explore some examples. Rental income is a popular option. By investing in real estate and renting out properties, you can generate a steady stream of income. However, it's important to remember that property investment also involves costs and responsibilities, such as maintenance and dealing with tenants. Another avenue is starting a side business. In this digital age, there are countless opportunities to turn your skills or passion into a profitable venture. You could start a blog, open an online store, or offer coaching services. The key is to identify what you enjoy and are good at, then find a way to monetize it. Freelance work is another viable option. Many companies are willing to pay for specialized skills on a project basis. Whether you're a graphic designer, a writer, a programmer, or an accountant, there's likely a market for your expertise. These are just a few examples of how to diversify your income. The idea is to create multiple streams that can flow into your financial reservoir, building your wealth over time. Remember, diversifying your income doesn't mean you need to stretch yourself thin or take on more than you can handle. The goal is to find income sources that align with your lifestyle, skills, and financial goals. In conclusion, diversifying your income is like building a stool with multiple legs. It provides stability, reduces risk, and can significantly boost your wealth-building efforts. Multiple income streams can provide financial security and accelerate wealth building. Financial discipline is the secret sauce of wealth building. This might sound like a cliché, but it's a proven truth in the world of financial management. Let's dive into what this really means. First, let's talk about budgeting. Picture this. You're a pilot, and your wealth is your aircraft. A budget is your flight plan. Without it, you're flying blind, not knowing how high you can soar or how far you can go. A well-plotted budget gives you a clear view of your income, your expenses, and the surplus you need to build your wealth. It enables you to identify unnecessary expenses, cut back on them, and redirect those funds towards wealth-building avenues. Next, let's consider controlling expenses. Imagine you're on a boat in the middle of the ocean, and your expenses are the leaks in your ship. If you don't plug them, you'll eventually sink. The same goes for your wealth. Unchecked expenses can drain your wealth faster than you can build it. By controlling your expenses, you ensure that your wealth doesn't just float, but sails towards your financial goals. Finally, we come to the concept of staying out of bad debt. Consider a runner in a race. Good debt is like a tailwind, propelling you forward. Bad debt, on the other hand, is like a headwind, slowing you down or even pushing you backwards. Examples of bad debt might be high-interest credit card debt or a loan for a depreciating asset. By staying out of bad debt, you're not just avoiding a financial pitfall, you're freeing up resources that you can use to grow your wealth. All these habits, budgeting, controlling expenses, staying out of bad debt, tie together into the knot of financial discipline. They're the gears that keep the engine of wealth building running smoothly, and the impact of financial discipline on wealth accumulation is substantial. It's like the difference between a trickle of water and a flowing river. The former might keep you afloat, but the latter can carry you towards your financial future. Financial discipline can make or break your wealth-building journey. It's not just about making money, it's about keeping it and growing it. That's the power of financial discipline. Wealth building is not a sprint, but a marathon. It's a journey that requires patience, perseverance, and strategic planning. Throughout this video, we've highlighted some of the key strategies that can help pave the way to a secure financial future. Firstly, we discussed the importance of establishing a strong financial foundation. This is your safety net, your starting point, and it's built on saving, budgeting, and eliminating debt. Then we dove into the power of investing. By investing wisely, you can make your money work for you, generating income even when you're not actively working. We also emphasized the significance of diversifying income streams. A diverse income portfolio can help protect against financial downturns, providing an additional layer of security. Finally, we touched on the role of financial discipline. It's about making smart choices, being consistent, and sticking with your plan, even when it's tough. Embrace these strategies, stay consistent, and watch your wealth grow over time. The road to financial prosperity is a steady climb, but with these strategies you're well equipped for the journey.